How much do you know about mortgages?
Nothing.
It's a loan that you get from the bank to buy a house.
A down payment on something.
On what though?
Well, could be on life, could be on a car.
It's like when you're buying a house, you get it on loan.
Well, do you know what a mortgage is?
I do. I got one. I own one.
Yeah?
Yeah.
How does it feel to have a mortgage?
I mean, one time I showed her still, and it said like 200,000, and she's like, "Doesn't that mean you owe 200,000?"
Buying your first home can be so difficult if you don't know what you're doing. Hence why we are here. We're back with another episode of Building Better with Brandon, presented by TD, where we're gonna teach you all of the steps that you need to know to purchase your first home. So before we get into it, I need to do a few things. Like, subscribe to this channel, tap the notification bell, like, comment, and share. Okay, so let's talk about it. I mean, most people really do wanna own a home, but for a lot of people, it can be a little bit scary. No problem. We are gonna make this so simple for you so you know everything you need to know to get that purchase. Let's go. We're talking about the big M word on this episode, mortgages. Latanya from TD, thanks for joining me in studio.
Thank you for having me.
Mortgages. Oh my goodness. Listen, some of us really need them if we want to get a property. Some of us don't want to have them, but they can come in handy, right?
Exactly.
Let's dive into some really big questions that I want to help clarify people with. Like, does a person always need a down payment to purchase a home?
Down payment is always essential.
Yeah.
The difference though is how much can someone afford. With the prices of houses, you find that the down payment may be hard to come by, but the minimum that you need to have is 5% off the purchase price.
And so let's say if a home were to cost, I don't know, like let's say $500,000. What is my math, and this is why I'm a journalist.
25,000.
And this is why you work for the bank.
Yes, we have to be quick on our feet with the mental math. So if in that instance, just for down payment, the borrower would need at least 25,000, but that's on top of other costs that a lot of people aren't aware of. So their closing costs, their transfer fees, lawyer fees, all of that. So it's very important for you to get in touch with a specialist around mortgages. At TD, we have mobile mortgage specialists that are able to give you the kind of advice and help you to do the math to make sure you understand the expense.
So that really should be like your first step.
First step.
So I know you talked about there are extra costs that come, outside of your down payment. But what about the time required? Because, you get emotional when you're going through this process.
Oh yeah, and it can be a nail-biting finish in my experience.
Yeah.
Personally, I've had closings happen within weeks, and then I've had closings happen over the duration of months. So it's always important to pay attention to the closing. Always ensure you have your closing costs, and then also ensure that you can meet the closing date, because there are penalties for not meeting your closing date.
So speaking about down payments, I mean, is there any other options people can look at? Because I know there's this new government program, right? The
First Home Savings Account.
Yeah.
It's recently launched, but really what it does is give a potential home buyer the ability to save $8,000 per year. And the beautiful thing about it, it has a dual benefit. The money that you put into it, it's tax deductible, like a contribution to an RSP, and the withdrawal from it, once it's for the purpose of purchasing a house, it's not taxable like a tax-free savings account.
Oh.
Another option too is that you can borrow from your RSP, your Registered Retirement Savings Plan, up to $35,000 per applicant. So if two people are joining on a home, and it's their first home, they are able to get $70,000 back from their RSP as a loan. And once they recontribute that money over 15 years, there's no tax involved.
Do you know how your credit score may affect your ability to be approved for a mortgage?
It's kind of like when your credit score is below the par, they will not approve your mortgage loan.
Right. And if it's high enough, then
They kind of give you a preferential interest rate.
Okay.
So what criteria impacts how much mortgage you can afford and your rate?
The biggest issue, or the biggest thing that impacts that, is your credit score. A good credit score is really maintained and improved if you handle your credits, any kind of credit, whether credit cards, loans, even your car loan, even your light and phone bills, those affect your credit. So it's very important that you have a consistent record of on-time payments, making sure that you're paying attention to fluctuating balances, meaning if you owe money, that you're actually actively paying the money.
You know, not just looking in the last 3 months as you're going to apply for a mortgage, but I guess you guys kind of look even further and further back.
Yes, we go as far back as we can find on the credit bureau. For every application for credit, we do look at personal credit bureaus. It speaks to the character of the applicant. How have you been managing your debt over time? We need to understand from your perspective what happened, and you need to fill in the blanks for us so that if we're gonna present you to our adjudication department, then they know the story.
And there's no way they can come to Latanya and say, but I'm a good person.
No. It's not something personal.
Listen, I appreciate the honesty.
It's business, it's not personal.
So what is a pre-approval? And more importantly, why is it important?
So pre-approval gives the potential borrower a great idea, an exact idea of how much they can afford, what kind of house price point they should be looking at, and it also gives them the benefit when they have a pre-approval in hand to, you know, compete with other people who are going after the same house. So we find that because of how the real estate market is going, it's best to go to a showing or to look at a property with a pre-approval in hand to show the buyers that you actually already approved at the bank. And that gives you an edge when it comes on to getting a property for yourself.
But this number that's on that pre-approval, that's the max number.
That's a max number. So you definitely will be looking at houses that you can afford. What we don't like is when clients go ahead and change circumstances in between pre-approval and purchase. Say, for example, they may make the mistake of taking on a pre-approved credit card that was offered to them by another institution, or they might buy a new car, change their car, which changes everything if your pre-approval was done before all of those things.
So keep it consistent.
Keep it consistent until you have your keys. That's the rule. That's the rule.
For a lot of communities, it can be a bit daunting to walk into a bank, and especially when there's so many documents that are required. It might be the first time, you know, in your family that you're even going through the process. Do you guys have any specific programs for certain communities to help out with this process?
Sure. So the Black customer experience segment is designed especially to support the Black community in areas of access to credit, to borrowing, and of course to trusted advice. So we have regional managers in place that literally their mandate is to ensure that they interact with the Black community, understand what their needs are, and give them the advice and the direction to connect with a TD professional that can support them either in the mortgages, in the loans, or of course with any wealth issues or management needs that they have.
So what percentage of your income should be dedicated to your housing costs, including your mortgage?
So inclusive of mortgage, total debt should comfortably be around 44%, because we want to ensure that the applicants are able to balance not only their mortgage payments but can afford life. They can afford the other payments, the heating, the insurance costs, costs for travel, on top of consistent savings, contributions to RSPs, going on vacations, balancing life.
That's interesting because, as we know, housing costs are different across the country. So let's say if you make $80,000 in Toronto, that doesn't go as far as making, let's say, $80,000 in Bowmanville, for example. So does the bank look at those potential factors, like, housing costs are more expensive in Toronto and maybe you might have to give a bit more of your income towards housing?
It's a case-by-case basis.
Yeah.
A lot of things will come into play, but what seems to be the trend is that people are becoming more, knowledgeable of how important it is to have co-signers.
Okay.
Join them on mortgages to support that.
Okay.
And normally what we're seeing in the trend, especially for your younger generation, is that their parents or relatives will join them on a mortgage just to help them with that affordability piece.
So speaking of those amazing relatives that some of us may be blessed with, can someone ever gift you a down payment?
It's pretty good if someone can gift you a down payment. What we'll require is that we see evidence of them having had this money for at least 3 months prior to giving it to you. So anyone who's giving you a gift would sign what is called a gift letter, which is what we'd expect.
Yeah.
And then on top of that, show us evidence of having that money on deposit.
See, this is why kids have to be good to their parents.
Be nice.
Do you know what different types of mortgages might be out there?
No.
Do you know the different types of mortgages that are out there?
No, not really.
Do you know the different? Now you trying to look at the questions. Do you know the different types of mortgage options that are out there?
Fixed and variable, yeah.
Yes.
Yeah.
So we have this flexible interest rate and fixed interest rate. I work in a bank, so
Oh, so you know it all. Which bank do you work for?
TD Bank.
Okay, we love TD. What are some examples of different mortgage options?
So we have what are called fixed and variable mortgages. A fixed rate mortgage speaks to the interest rate and how it's calculated over the term of your loan. So what it does is guarantee a fixed payment of principal and interest for a particular term that you've chosen.
So same payment every single month.
Same payment every time. With a variable rate though, what's different is that when, as you've heard before, prime changes, it will affect, your payments will still be the same, but it can affect how much of that money is paid to interest and how much services the principal.
Oh.
But
So you could see some fluctuations in that.
in how your mortgage is paid down, for sure.
Those are two very different options. How do you know which one is best for someone?
Again, with your mortgage, just like your house, it's really personal. So it's best to speak to your mortgage specialist to get the specifics of, based on how your situation is financially, which option is the best one for you.
Okay.
Yeah.
So get that advice for
The
sure.
advice, yes, they'll know.
How do interest rates affect your mortgage payment? Because we hear it all the time. If the Bank of Canada increases mortgage, the interest rates, they keep saying mortgages are going to go up or people are going to be paying more. Explain that in simple terms for us.
If you're in a variable rate mortgage or an open mortgage, which is where you have not locked in the rate because you want to have flexibility in paying it off, making lump sum payments or paying it quicker than the term you've agreed on, then when the Bank of Canada says interest rates are going to move, it affects the monthly payments that you have in place.
We have been hearing this a lot more, and people asking about home equity line of credit. What is that?
Home equity line of credit gives the owner of a house ability to access equity from the home. Instead of having a fixed mortgage, they can have a line of credit, which is a revolving line. So what's different? Your mortgage, you actually make fixed payments and you chip away at the principal. But once you make those payments, the room for credit decreases. With a home equity line of credit, the revolving approved amount remains consistent. Your job is to pay it down, and once you pay it down, it's available again for you to spend in the future.
Oh, so this is why people use it for, say, home renovations or anything like that.
Interestingly too, if you do pay the whole mortgage off, this home equity line of credit is still sitting there and you have access to it. Lots of people access it for a second down payment, for a second property, that kind of thing. So it comes in handy. They can use it for anything. It doesn't have to be property related.
Yeah.
So that option is always there, a smart way.
But that option only is available once you own a home.
Once you have to have a house before you can get that.
Which means you have to have good credit, then you got to walk into TD, then
Good
you actually have
income.
to put a good income. So there's a whole bunch of things like you talked about that we have to go through.
Right.
Latanya, you've been really, really helpful through all of this. Is there any last piece of advice you want to give to the people?
Sure. Whenever you're looking at purchasing a home, it's one of the biggest investments you'll ever have to do.
Yeah.
So it's very crucial for you to always, do your research. In addition to that, listen to the experts when they give you advice. And of course, with any major purchase, always maintain that credit. It is the key to realizing your dreams and to owning your own home.
We love the keys. Thank you, Latanya, for joining me.
Thank you.
Hey, it's BG, and I want to know, what do you think about what you just watched? Make sure to drop your thoughts in the comments below, but also make sure to check out even more great content like this video and this video over here. And if you haven't subscribed to the Brandon Gona Show, do so right now by clicking this button right here.